Are you a British expat or a non-UK citizen looking to refinance or purchase a property in the UK? This video is for you. I'm going to explain how you could purchase or refinance a property in the UK. More and more UK nationals are choosing to move abroad, either for work or for a lifestyle change. However, some decide to keep their properties in the UK whilst moving abroad. When they come to refinance that property, they come unstuck. Historically, these sorts of borrowers have found it difficult to remortgage onto another deal. You could be a budding landlord, you could be an existing property investor looking to buy more properties in the UK. Historically, these sorts of landlords have found it difficult to buy more properties with the product offerings being ever so low. However, recently, lenders have released a lot more products, so these sorts of landlords may qualify for a mortgage whilst living abroad. Now let's look at some of the factors the lender will look at when assessing an expat buy-to-let. The first one is income. Typically speaking, the lender would require the applicant to have a minimum level of income. That can be anywhere from £20,000 upwards. If the payslips are currently in a non-UK format, the lender would require you to have that translated into a UK format so it's easily readable so they can verify your income. Don't worry if you're self-employed whilst living abroad. As long as you've got a suitably qualified accountant who's got the equivalent of English qualifications who can verify your income, it is potentially possible for you to get a mortgage whilst you're self-employed. The only thing you may need to worry about is potentially having more than 1 year's accounts available. Your country of current residence will also be a factor. Now, it's very important to check with your advisor to make sure that the country that you're currently residing in isn't on the restricted list. So this is classed as high-risk countries. Now, let's look into deposits. As this is a specialist mortgage, you may require a large deposit when you are looking to purchase or even refinance. So for example, it may be a 25 or 30% deposit, depending on the market conditions. In the UK, you could probably get a mortgage with a 20% deposit on a buy-to-let basis. In terms of the actual deposit, you can use your personal savings towards a mortgage application. If your bank is based abroad and your money is currently sat in there, if the savings account reads in non-English, you will need to get it translated into pound sterling, so it is easily verifiable for the lender. Some lenders may require you to have a UK credit footprint. Now, what does that mean? So they may insist that you have a bank account registered in the UK, maybe a credit card, or they may insist that you already have a property in the UK before you're looking to purchase another one. Once again, it's very important that you speak to a mortgage broker because your mortgage broker should be able to place you with the right lender. If you have some historic adverse credits, this could be CCJs, it could be defaults, it could be late payments or missed payments. Don't worry, there are potential options out there for you as well. The lender may insist that you satisfy the CCJ or the default or any late payments before you proceed to a mortgage application. Let's look at the property type and the usage. It's important to remember this is a buy-to-let application. So it's also important to remember that you can't have family members living in the property because that's against regulation. However, good news is that if you're using the property as a house of multiple occupation, there are lenders potentially available to you. Also, a growing trend in the UK is properties being bought for use of holiday lets. There are potential lenders out there who will lend you based on you purchasing a holiday let in the UK. Once again, it's important that you speak to your mortgage broker so they can identify the best product for you. And finally, if you're looking to purchase that property through a limited company, that's also possible. The UK company must be registered in the UK, you must have an active bank account, and the accountant must be registered in the UK as well so they can file corporation tax at the end of the accounting year. So just to recap, it may be possible for you to purchase or refinance that property in the UK. A few factors to consider. If you're employed, minimum income is typically £20,000 per year. If you're self-employed, don't worry about it too much at all, as long as the accountant can verify your income for you. Country residence will have an impact on which lenders will lend to you, as well as a deposit. If the deposit is based on a bank account abroad and it reads in non-English, you may need to get that verified so it's translated in English. The lender may require you to have a UK credit footprint, so that's a bank account, maybe a mortgage, maybe some sort of credit borrowing already. And also, it's potentially possible for you to buy or refinance a HMO property or a holiday let property, or even buy through a limited company. If you're interested in buying a holiday let, make sure you check out this video.